Hello friends, welcome back. Here I am Renu Srikanth Tantry with our third session of the quick revision for Term 1 exam. Today's session we will be discussing the topic of accounting for share capital. Here we will be learning several concepts related to the topic while solving practical MCQ exam based questions. So let us start. The first question here we have is match the following. We are supposed to match the column 1 with the column 2 and the options are given here. The options which are available are A. Actual number of shares offered to the public. B. Maximum number of shares above which a company cannot issue to the public. C. Number of shares applied by the public. D. The amount which is called at the time of liquidation of the company. And we are supposed to match it with authorized capital, issued capital, uncalled capital, subscribed capital. Now, we need to know that a company form of organization raises capital by means of issue of shares. So there are different categories of shares. The first category is on the topmost is authorized capital. Authorized capital is the maximum amount of capital with which a company is registered. So company can issue maximum that many number of shares to the public. Second, after that, out of this authorized capital, it might not raise the entire amount at one go. It might only decide to raise a few shares. Issue few shares and raise a portion of the capital. Like if it is registered with 50 lakh, it might decide that for right now they need only 20 lakh. So only shares worth for raising 20 lakh rupees would be issued. So that is called as issued capital. So out of the authorized capital, whatever is issued to the public, asking them to subscribe, that is called as issued capital. Out of these, people from the public apply to the shares. They come forward saying that they are ready to purchase a share of the company and they send in the applications. So at that point of time, whatever is the shares which are taken up by the public, that is called as subscribed capital. And out of the subscribed capital, there are different categories further, but for this question, if you go further, from this information, we can see that the actual number of shares offered to the public is issued capital. Maximum number of shares above which the company cannot issue. So we will match it like this. Actual number of shares issued to the public is issued capital. So A is 2. Maximum number of shares above which a company cannot issue to the public is the authorized capital. So B is 1. Number of shares applied by the public, what the public has taken, is called as subscribed capital. And lastly, the uncalled capital. Now, what is the uncalled capital? It is that portion of the capital which has remained uncalled. Company might not call the entire face value of the share at one go. It might split the face value. Suppose the face value is rupees 10. It might be split as 2 rupees on application, 3 on allotment, 3 on first call, and 2 on final call. Like that, it can be split. So that portion of the capital which the company has not yet asked the people to pay, that is uncalled capital. So this way, if you see the options here, A2, B1, A2, B1, C4, we find that it is only there in option A. So the right answer for this particular question is option A. So I hope now with this you have understood that there are different categories of capital. Further, there are other capital also like paid up capital, that portion of the capital which has been called up and paid by the public, that is paid up capital. So now moving on, we'll go to the next question. This question is, second, reserve capital is not a part of. Please, while reading, be careful whether they are saying part of or not, whether it is true or false, whether it's correct or not correct. That part you have to be careful. So here, reserve capital is not a part of which capital? Now we have already seen the authorized capital, subscribed capital, issued capital, and unsubscribed capital is what portion that has not been. Now, they are asking reserve capital is not a part of which. Now, what is reserve capital? Now, reserve capital is that portion of the capital which has been issued to the public but would remain uncalled. It is not going to be called up till the liquidation of the company, till the company is being wound up. Till that time, the company will not call up that portion of the capital from the shareholder. It will remain uncalled at that time. So out of this, you know that reserve capital is obviously a part of the authorized capital because it is a maximum capital which it can be issued. Out of that only shares would have been issued. It is the shares which is there with the shareholders. So they have subscribed to it. So it is a part of subscribed capital as well. Out of the subscribed capital, whatever portion has not been paid, that which is going to be called only the event of winding up. So it is the unsubscribed capital. It is not that portion of the capital which has not been subscribed by the public. It has been subscribed by the public. And it is a part of issued capital because whatever has been issued only has been subscribed. Therefore, reserve capital is not a part of unsubscribed capital. What is unsubscribed capital? The portion of the capital of the company which has not been subscribed by the people. When it is not subscribed by the people, it has not been part of the reserve. Capital is not part of that particular capital. Now moving on. I hope that is clear. We go to the next question. Next is the preference shares which do not carry the right to receive arrears of dividend. Here, arrears of dividend. Now, basically, we know that shares which can be issued by the company are of two categories. One is equity shares, other one is preference shares. Now, from the name only you know that there is some preference given to them. It is in respect of payment of dividend and in respect of repayment of capital that they get preference over the equity shareholders. So, which means that when there is a required profit and dividend being declared, first preference shareholders would be paid dividend. After that, equity shareholders would get their share of dividend. And in case of winding up of the company, first the preference share capital would be repaid and then the equity shareholders would be paid back their capital. So that is the difference between equity and preference shares. Now, under preference shares, there are various categories, different categories of preference shares which can be issued by a company. Now, basically, if you see the preference shares, the categories that can be issued are on the basis of redeemability. You have redeemable and irredeemable shares. Redeemable and irredeemable. Now, redeemable preference shares means those preference shares when they are being issued only it is being stated that it is going to be purchased back by the company. Say after 5 years or 7 years it is going to be taken back, paid back and taken back by the company. Whereas irredeemable preference shares are those preference shares which are not going to be redeemed back, not going to be bought back by the company. It is going to remain there till the liquidation only. After liquidation, at the time of liquidation, it would get repaid. That is the category under redeemability. Then you have on the basis of convertibility. On the basis of convertibility, you have convertible and non-convertible. Now, convertible preference shares refers to those preference shares when they are issued. It is specified that they are going to get converted into some other category of shares, either some other category preference shares or as equity shares. But non-convertible preference shares are those which will remain preference shares during the entire life of the company. They are not going to get converted into any other category of preference shares. So that way, on the basis of convertibility, you have convertible, non-convertible. The next we have on the basis of cumulation. You have cumulative and non-cumulative. Cumulative and non-cumulative. No. What? Cumulative. Cumulation here means to accumulation. So, what they are going to accumulate? If it is accumulative preference shares, then it means that in case in a particular year, suppose a company does not have adequate profit and it is not able to declare dividend, then under such circumstance, if the category of preference shares being held as cumulative preference shares, then that dividend would get accumulated, and the next year or the subsequent years when there is adequate profit, those preference shares of the previous dividend which was not declared, which could not be paid because of lack of profit, would be also have to be paid by the company. So the dividend which has arrears will get accumulated. But when it is non-cumulative preference shares, it refers to those preference shares where the dividend is not going to get accumulated. If there's profit, dividend is paid. If there's no profit, it's not paid. Next year when there's a profit, only that year dividend would get paid. The previous years would lapse, they will not get it. So that is non-cumulative. Normally preference shares, if not specified as cumulative, we will assume that it's non-cumulative only. And last category that we have is participation on the basis of participation. Now on the basis of participation, we have participating and non-participating preferences. Now, what are they going to participate? Now you know that out of the net profit, whatever is there of the company, first the preference shareholders would be paid dividend and then the equity shareholder would be paid dividend. Even after that, whatever would be left, that is called as surplus. Now, in case there's a category of participating preference shares, then those preference shareholders, in addition to getting first dividend before the equity shareholder, they will also will be entitled to get a share in the surplus. So out of this net profit they have, first the preference shareholders were paid the dividend and then the equity shareholders got paid their dividend, and after that still surplus was left. Now if it is a participating preference shares which have been issued, then these shareholders would be entitled to participate in the surplus and they can again get a share in this amount. So that is participating preference shares. So if the category of preference shares is where they will not get any such participation, right, then it is a non-participating preference shares. So these are the different categories of preference shares. Now let us look at the option. Here what they have said is the preference shares which do not carry the right to receive arrears or dividend. So that is under the category of accumulation. So they don't have a right to receive arrear. If in a particular year dividend is not paid, they will not get that year's dividend the next year. They are not going to accumulate it. So that means it is a non-cumulative. So here if you see, it is under the option D, non-cumulative preference shares. So that is the right answer. It is not non-participating preference shares, means they will not be sharing the surplus. Irredeemable preference shares, no. It is not non-convertible preference shares, no. So the right answer is D. I hope that is clear. About preference shares completely I've explained to you. Now moving on to the next question. The next question is, subscription of shares should not be less than dash percentage of the issued shares. Now we know that when company wants capital, it issues shares and raises money from the public. Now when it has issued the shares to the public, it has to get applications from the public and then it goes ahead with the allotment of shares to those who have applied for the shares in the company. Now, in respect of the public applying is called as subscription to the shares. Now, as per the SEBI guidelines, Securities and Exchange Board of India, that is SEBI in short, it has specified that there should be minimum subscription of 90% of the issued capital. So whatever, suppose 1 lakh shares have been issued, then at least 90,000 shares should have been subscribed by the public, should be subscribed. If even if one share is less, like 89,999 shares have been subscribed, then this criteria of 90% is not fulfilled, and the entire amount what has been collected to the entire process will have to be refunded and the issue has to be cancelled. That is the regulation about minimum subscription which has been specified. So the correct option here is B, 90%. Clear? Now moving on to the next question, we have here, which of the following is not a purpose for which securities premium amount can be used? Now we know what is securities premium. When shares are issued, it can be issued at par or at premium. Means, suppose the nominal or the par value of the share is rupees 100. If it is issued, shares are issued at a price greater than 100, say 110 or 120, then that 10 rupees or 20 rupees, that is called as premium. So if it is issued at this price, then the premium is, if it is issued at 110, 10 rupees is premium. If it is issued at 120, 20 rupees is the premium. Now this, whatever is the premium which is being collected, has to be put into a separate account called as Securities Premium Reserve account. And the purposes for which it can be utilized have been given under section 52(2) of the Companies Act of 2013. Here they have specified 5 purposes for which the Securities Premium Reserve account balance can be utilized. Only for these 5 stated purposes it can be utilized. For any other purpose it cannot be utilized. It's not a free reserve that you can distribute it as dividend. Now let us understand the purposes. Here the purposes which have been stated are issuing fully paid, be careful, it is fully paid bonus shares to the shareholders. To the existing shareholders, fully paid bonus shares can be given. You can take out from the Securities Premium Reserve and it will get converted into share. Second, writing of preliminary expenses of the company. Those expenses incurred before the incorporation of the company are called as preliminary expenses. To write off those, you can utilize the balance in the Securities Premium Reserve. Writing off the expenses of or the commission paid or discount allowed on any issue of securities or debentures of the company. So when you're issuing securities or debentures of the company, there might be several expenses incurred or commission required to be paid, or discount might be allowed. When it is debentures, they can be issued at discount as well. And those expenses could be written off using the balance in the Securities Premium Reserve account. Fourth one is providing for the premium payable on the redemption of any redeemable preference shares or of any debentures of the company. So when a redeemable preference shares category has been issued and if it is going to be redeemed at a premium, at the time of redemption, if extra amount is being paid over and above the par value, then we say premium is payable on that redemption. Then that premium payable can be written off, can be provided by using the Securities Premium Reserve. And finally, the fifth purpose is in purchasing its own shares. That is, in case of buyback of shares by the company, for that purpose, the balance in the securities premium can be issued. Now here, the question we have is which of the following is not a purpose for which securities premium amount can be used. So if you remember these 5, look at this. Issuing fully paid bonus shares to shareholders. This is a purpose. Issuing partly paid bonus shares. It is only for fully paid up. Partly paid cannot be issued, bonus shares cannot be issued under this category. Writing of preliminary expense of the company, yes, it is there. In purchasing its own shares, that is buyback, is there. So the right option for this question is issuing partly paid bonus shares to the company is not a purpose for which you can utilize Securities Premium Reserve. So I hope that is clear. Now moving on, we go to the next question. This question is share allotment account is a or an personal account, real account, nominal account, none of the above. Now we already have studied in detail in the 11th standard about what is personal account, what is real account, what is nominal account. Now in this case, share allotment account, what does it represent? Share allotment account basically represents the money from the shareholder. So whatever is the amount which is related to the shareholder, that is being represented by share allotment account. and therefore the right answer would be it's a personal account. Okay, now moving on, we go to the next question. Balance in share for future account is shown in the balance sheet under the head of. Now, the options are reserve and surplus, long-term borrowing, share capital, other current liability. Now we are talking about share for future account. What is share for future account? When the shares have been issued and the shareholder is called upon to pay the amount and he does not pay, and after being given a notice further still he does not pay, then the company, if it is authorized, it might go for forfeiture of share, means it can cancel out those shares and remove the name of that particular shareholder from the register of members. So at that point of time, whatever money so far has been paid by the shareholder to the company will not be refunded. It would be there with the company. It would be in the form of capital profit of the company. That is not going to be refunded. Now, that whatever amount that has been received, amount received from the defaulting shareholder, that is credited. It is credited to the share for future account. Now, till it is reissued, it would continue to remain in the share for future account. After those forfeited shares are reissued, then there is a separate procedure on the basis of the number of shares reissued that would be getting transferred. What is the balance would get transferred to capital reserve. Now, but for this particular question, the balance and share forfeiture account is shown in the balance sheet under which head? Now, basically, when we have the share capital, that is the right answer, share capital, we have the notes to accounts where we will be writing the authorized capital, the details. Then we would be writing about issued capital, the details of how many shares have been issued. Then we have the subscribed capital. Under subscribed capital, again there is two categories, subscribed but fully paid and subscribed but not fully paid. There under this particular subscribed capital category, we add the share for future account balance till they are reissued. So it is added under the subscribed capital and therefore it falls under the share capital category. It is not reserve and surplus, it is not a long-term borrowing, and it's not, of course, other current liability. I hope now that is clear to you. Now moving on, we will go to the next question. If purchase consideration exceeds net assets, then it results in. Now here we are talking about the purchase consideration and net asset. Now what is purchase consideration? A purchase consideration is something which is being paid for the purchase. Suppose a business is being purchased. Then suppose the purchase consideration which is going to be paid is 11 lakh. We'll take a case where a business is being purchased and suppose X Limited is being purchased and the amount that is going to be paid to acquire X Limited is 11 lakh. And the value of the net assets of the company. What is net asset? You take all the assets, from that you remove off the liabilities from it. That will result in net asset. Suppose that is 10 lakh. So this is the asset, net asset value of X Limited. But for this 10 lakh worth of business, if the purchaser is ready to pay 11 lakh, then there is a case where the purchase consideration is exceeding the net asset. 11 lakh is being paid to acquire 10 lakh worth. And why is this 1 lakh extra being paid? The 1 lakh extra is being paid towards goodwill. 10 lakh out of this 11 lakh, 10 lakh is being paid towards net asset, and the extra 1 lakh that is being paid is towards a goodwill of X Limited which it might have created for itself. And that is why, so if purchase consideration exceeds net assets, then it is a goodwill. And if it is opposite, if the net assets exceed purchase consideration, it results in capital reserve. That is, if the purchase consideration was 9 lakh and net asset is 10 lakh, you're paying lesser to acquire 10 lakh worth of asset, you're just paying 9 lakh. In that case, the net asset exceeds purchase consideration, the opposite situation, then that would be capital reserve. So you have to just understand that when more is being paid to acquire asset worth 10 lakhs only, that is goodwill. Hope that is clear. Moving on, we will go to next question. XYZ Limited is a newly formed company. How much discount per share can it allow for issuing its share to the public? A very important point here about company form of organization is that it can, as per the Companies Act of 2013, it cannot issue shares at discount. Issue of shares at discount is not allowed. It is not allowed. It's a big no. It cannot be done. Shares can be issued either at par or at premium, not at discount. The only case where shares can be issued at discount would be in case of employee stock option plan. That is, when it is issued to the employees or directors of the company, then under the ESOP plan, stock option plan, then only it can be issued at discount. But here, when it is being issued to public, it cannot be issued at discount, and therefore D, none would be the right answer for this. Hope that is clear. Moving further, next question is MN Limited issued 20,000 shares to public at the rate of 10 per share at 20 rupees premium. So 20% of 10, that would be 2 rupees is a premium. All the shares were subscribed and amount was received. Identify the amount to be transferred to Securities Premium Reserve account. Now, whatever is the nominal value is 10 and premium is at the rate of 20% of rupees 10, that is rupees 2 per share is being collected as premium. Therefore, to calculate the amount of premium, we just use the formula number of shares which have been issued, which is 20,000 shares being issued into premium per share 2. Therefore, 40,000 is the rupees is the premium which is being collected and which will be transferred to Securities Premium Reserve account by MN Limited. So the right answer is C, 40,000. Hope that is clear. Next, we go to the next question. A company forfeited 4,000 shares of rupees 10 each. Now here we are going to learn about the forfeiture of shares, on which application money of 3 rupees has been paid. So out of this 10 rupees, application money of 3 has been paid. Means the company has received 3 rupees. Out of these, 2,000 shares were reissued as fully paid up. So after forfeiture, they have forfeited 4,000 shares, but they have reissued how much? 2,000 shares. Forfeited 4,000. As fully paid up, and 4,000 rupees has been transferred to capital reserve. They are asking us to calculate the rate at which these shares were reissued. So from this, first thing that we will see is we'll write down the details here. The number of shares forfeited is 400 and amount received on those shares rupees 3 per share. Therefore, in the forfeited share account or share forfeiture account, the amount which is credited to it on forfeiture would be 4,000 into 3 rupees 12,000. This is being credited. This detail we have. But out of this, they are saying they have reissued 2,000 shares. Therefore, out of this, if you see, what amount will be transferred? We have to calculate the proportionate amount because we have share forfeiture account being credited with 12,000, but it is related to 4,000 shares. But out of the 4,000, only 2,000 shares have been reissued. So we have to calculate the proportionate amount of share forfeited or forfeited share account balance to be transferred to. So for 4,000 shares, I will write it here, that would be better. For 4,000 shares, the amount which is credited was 12,000. Therefore, for 2,000 shares, how much? I use a cross multiplication, which is more simplest. 12,000 into 2,000 divided by 4,000. So ones are, twos are. So the amount related to those 2,000 shares which have been issued is rupees 6,000, which is there in the share forfeited account. Now there's one more formula that you need to know, that is to find out the amount which would be transferred to capital reserve. After the shares have been reissued, we would take the proportionate amount related to the proportionate amount of balance in the forfeited share account in respect of the reissued shares I'm talking about. That is what we calculated here. Reissued shares. From that we remove the discount on reissue. If those shares are reissued at a discount, that discount will be removed from this and the balance what was left would only be transferred to capital reserve. What is this discount on reissue? When these shares have been forfeited, they are available with the company and it can be reissued to some other new person. And the new person who is taking up those shares will become the shareholder of the company. Now, when the shares are being given like this, the company at that point of time, at the time of reissue of forfeited share, it can reissue at discount. In the previous question, we saw that company cannot issue shares to public at discount. That would not be applicable in this case too. In case of forfeited shares are being reissued, it can be reissued at discount. But there's a limit to that also. The maximum amount of discount that can be passed on to the new shareholder on reissue of these forfeited shares would be restricted to the amount that was received from the defaulting shareholder. That is, it would be restricted to the amount which is credited to the forfeited share account. Like in this case, 12,000 rupees was paid by the old shareholder, so maximum discount that can get transferred to the new shareholder to whom the shares are being reissued would be maximum 12,000. So that is the concept here. Now coming back to a question here, we have been given here that 4,000 has been transferred to capital reserve. So we have this amount which has been transferred to capital reserve. We have found out the proportion amount related to the shares which have been reissued, which is lying in the forfeited share account, which we found to be 6,000. What we don't know is the discount on reissue, which we can find out now. We just take this to the other side and bring it to the right hand side. So the discount on reissue here would be 6,000 minus 4,000. That would be rupees 2,000. So 2,000 is the discount allowed. But this is in respect of the 2,000 shares issued. So the discount per share would be 2,000 rupees, which is related to the 2,000 shares, will come to rupee 1. So from this we know that on reissue, when it has been issued as fully paid, what is the par value of the share? 10 rupees. So 10 rupees share being issued at a discount of 1 rupee means it was reissued at rupees 9 per share. So the right answer would be C, that the rate at which these shares were reissued is 9 per share. 9 was collected on each share of 2,000 shares from the new shareholder. So I hope this procedure of calculation is clear to you. Now moving on, we go to the next Question: 600 shares of rupees 10 each issued at a premium of 20%. So 20% is on the nominal value, 2 rupees. They have been issued at premium of 20%, were forfeited for non-payment of 5 rupees per share on allotment including premium. So the failure was at the allotment stage, and rupees 2 per share on first and final call. So now here rupees 10 is the par value, and it is being collected in stages. From the information we understand that at the allotment stage 5 rupees is being collected, and it includes, including premium, 20% of 10. Therefore 3 rupees is related to share capital and 2 rupees is related to the premium. And then they said, and 2 rupees per share, first and final call. So first and final call was also not paid, and that was 2 rupees. The total value at which it is being issued is 12. Par value plus 2, 12 rupees. Now, from this, we can find out the amount which has been received. But before that, let us see what they want to calculate. Just don't go about calculating. Just go and see what is required in the question, and don't waste time, because this is MCQ based. You have to be fast in calculation. They have asked us, share allotment account will be credited with, at the time of forfeiture, with what amount? So, the forfeiture entry is, we would debit the share capital account with the number of shares forfeited into the called up value. And in case securities premium has not been received, then that would be reversed. In this case, the failure was at the allotment stage and the premium has not been received. So here we can reverse securities premium reserve because it has not been received. So that would get reversed here. And then we would credit the share allotment account with the amount not received, the share first and final call amount with the amount which has not been received, and we would credit the forfeited share account or the share forfeiture account. People use it by different name, but both mean the same account with the amount that has been received. This is the amount received, this is the amount not received, and the amount not received. Now the question here they have asked is, they have asked us to find out this amount, share allotment account is credited with this amount. What has been not received here? On allotment, 5 rupees was supposed to be received, and that has not been received. Therefore, amount not received on allotment would be, yes, on those 600 shares, rupees 5, which means 3000 rupees has not been received, and therefore the option is 3000. So I hope it is clear. The premium has not been received, so it is reversed here, and this entire amount of 5 rupees has not been received on the shares which have been allotted to this particular shareholder. I hope that concept is clear. Now with that, individual questions have been completed. Now we will go for this case-based question. Now here we will have a few questions on the basis of this case. Let us look at this question. On 1st April 2019, Sangeeta Limited issued 30,000 equity shares of 10 each at a premium of 4 rupees per share, payable as follows. 6 rupees on application including 1 rupee premium, means 5 rupees towards share capital, 1 rupees towards premiums including. 2 rupees on allotment including 1 rupee premium, 3 on first call including 1 rupee premium, 3 rupees on second and final call including 1 rupee premium. So 4 rupees premium has been split as 1 rupee at each stage. Applications were received for 45,000 shares. It is a case of over-subscription of shares, of which application for 9,000 shares were rejected. So out of the 45,000, directly they have rejected and they would have refunded. Their money were refunded. So out of 45,000, 9,000 gone, 36,000 shares are lying there. In respect of that, they are saying the rest of the applicants were issued shares on pro rata basis, and their excess money were adjusted against allotment. So which means for 36,000 applicants, the 30,000 shares which were issued are allotted. Now they have given Hari, to whom 600 shares were allotted, failed to pay the allotment money. So 600 shares were allotted to Hari and he failed at the allotment stage. And his shares were forfeited after allotment. So immediately after allotment, there is a forfeiture of these 600 shares. Then Mohan, who had applied for, here it was allotted, but here Mohan, they've given us a applied for. He had applied for 1080 shares. He failed to pay the two calls, that is the first call and second final call. And on such failure, means after the second final call, his shares are forfeited. Now, 1200 forfeited shares were reissued as fully paid up. So, out of the total shares forfeited, we cannot directly calculate. We have to find out how much has been allotted to Mohan and add it to the 600. Then we will know the forfeited share. Out of that, 1200 shares were issued as fully paid up on receipt of 9 rupees per share. Issued as fully paid up means it has been issued at a discount of 1 rupee. The whole of the Mohan share being included. So whatever is a Mohan share, entirely it is included. Out of 1200, if we remove the Mohan, whatever is left, that is being taken out of Hari's share. So this is the case. Now let us look at the question and then take only the relevant information from here. First question, what is a pro rata allotment ratio? Now, it's a very simple question. We remember just this, that this ratio is calculated as share allotted is to share applied. Now here they said they had issued 30,000 shares. They had applied for 45,000 shares. But out of that, directly they have rejected and they have refunded the amount related to 9,000 shares. Therefore, 36,000 applicants were there. So many shares were there and they said they went ahead with allotment. They can allot 30,000 shares to these 36,000 applications. So what is the number of shares allotted? 30,000. The shares applied for which it is allotted? 36,000. So this is a ratio. What you can do is just cancel out 30 is to 36. We can reduce it to lowest form. 6 5s are 6 6. Therefore, the correct answer is 5 is to 6. So, pro rata ratio is calculated as shares allotted is to shares applied. I hope this concept is clear. We'll go to the next question based on this case. The next question is, what is the amount received on allotment? Now we have to calculate quite a bit to get this amount. So for that, let us go back and look at this question. Now they have said that 30,000 shares are being allotted and the amount is rupees 2 on allotment. So we have 30,000 shares, 2 rupees allotment. So we will do the working notes here. First, working note. We are going to calculate the amount received on allotment. So for this, the amount which is due on allotment, as we said, it is the number of shares which have been issued, 30,000 into 2 rupees. So that comes to 60,000 rupees was supposed to be received. But we know that there was a pro rata allotment done. 36,000 applications but allotted only 30,000. So from that we have to remove off. There was excess application money. So we have to remove off the excess application money. And that is 36,000 application minus 30,000, that is 6,000 excess application into the application money. The application money was 6 rupees was supposed to be received. So that would have been received. So totally 36,000 was the amount which was lying with the company which was received at the application stage in excess. That is adjusted against allotment and therefore 24,000 is the amount that was supposed to be received from the shareholders. But there is a problem there. Problem is there was one shareholder. His name was Hari. He was allotted 600 shares but he failed to pay the allotment money. So which means and his shares were forfeited. which means he has not paid the allotment money. The company has not received. So we have to remove that amount. So less amount which is not received from Hari. We have to calculate that and we have to subtract that. After that, we would get the amount which is received on allotment. Now, for calculating this amount which is not received from Hari, we will have to prepare another working note. Working note number 2. Amount not received from Hari. Now, in respect of Hari, the detail that we have is he was allotted 600 shares. So, he was allotted 600 shares and he failed to pay the allotment money. How many shares he had applied for, we have to find out. Now, for 30,000 shares were allotted to 36,000 applications. Therefore, if Hari has been allotted 600 shares, this is what Hari has been allotted. How many shares had applied for? 600 into 36,000 divided by 30,000. 6 are, 5 are, 5 ones are. So, we find out that he has been allotted 300. I'm sorry, I think there is a mistake in the calculation here. 30,000 shares allotted, 36. It is 720 shares, sir. The calculation mistake here. So it is 600 into 36,000 divided by 30,000 comes to 720 shares. These are the number of shares he had applied for. Applied for should be greater than what is allotted. That is what gave the doubt. Now, we know that from this excess applications of Hari were 720 minus 600, 120 shares. And the excess application money would be 120 into the application money of 6. That comes to 720 rupees. Now, the allotment money due on Hari's share is he was allotted 600 shares. He was supposed to pay 2 rupees on allotment. Therefore, 1200 was supposed to be received. But we would adjust first the excess application money related to him of this 720. So, actually he was supposed to pay only 480. Therefore, this is the amount not received from Hari at the time of allotment. So, that we would write here 480. Therefore, you would get the amount here 23,520. So, this is the amount which was actually received by the company at the allotment stage. And therefore, C is the right answer. I hope that is clear. Now moving on, the next question that we have is what is the amount received on second and final call? Now, you have to remember that there were totally 30,000 shares. But out of that, the shares that are being forfeited here are the 600 shares and related to Mohan also the shares got forfeited. So, here they have asked us the amount received on second and final call. So the number of shares, first we have to calculate, was 30,000. Out of that, forfeited were that of Hari, we have 600 shares. But of Mohan, they have given that Mohan had applied for, they had applied for 1080 shares. So we have to calculate the number of shares he was allotted. So for 36,000 applications, 30,000 shares were allotted. Therefore, for 1080 applications, how many allotted? So cross multiply 1080 into 30,000 divided by 36,000. If you do the calculations, it would come to 900 shares. Therefore, Mohan was allotted 900 shares. They have been forfeited because he failed to pay the call money. Therefore, totally 1,500 shares have been forfeited. So out of 30,000 shares, 1,500 shares forfeited. So you left with just 28,500 shares at the second and final call stage. Now, at the second and final call stage, if you see here, the amount that is supposed to be received was 3 rupees. So if you take the amount 28,500 into 3, you will have 85,500. This is the amount which was amount received on second and final call. The amount was not received from Hari, it was forfeit and cancelled, and Mohan failed to pay, and therefore on his share also money has not been received. The amount which has been received with the company on the second and final call is 85,500. So I hope how we calculated this is clear. Moving on, there's one more question on the same case based. What is the number of shares of Hari included in 1,200 shares reissued and the amount transferred to capital reserve? Now, from the question we found that the number of shares which have been forfeited was 600 of Hari, and just now we calculated Mohan was allotted 900. So, but however 1,200 shares, forfeited shares were reissued. So, if we go by that, the forfeited shares were Hari 600, Mohan 900. Therefore, 1,500 were totally forfeited, but reissued is 1,200 shares. In that 1,200, they said whole of Mohan's share has been reissued, which means 900 related to Mohan. That means rest related to Hari. Out of 1,200, if we remove off 900, then what is related to Hari? It is 300 shares. So 300 shares is the answer. But here we have A and B both having 300 shares. Next that there was is an amount transferred to capital reserve. Now what would be the amount transferred to capital reserve? We have to calculate. Now we know the total number of shares forfeited. We know the reissue is 1,200. Now we have to find out the amount. Now to calculate the amount which is transferred to capital reserve, now see, we know that it is reissued like this. First, for Mohan, there are 900 shares which are totally reissued, and for Hari, they have issued 300 shares. Now, in the forfeited share account, in case of Mohan, what is the amount that is transferred to the forfeited share account? That we have to calculate. Now, if you see on these 900 shares, what has been received? Mohan, who had applied for 1,080, failed to pay the 2 calls. So he has paid till here 6 plus 2, 8, but we have to remove off the premium of 2 rupees. So 8 minus 2 is 6 on 900. So if you see on those shares of 900 at the rate of rupees 6, 5,400 was received from him and has been credited to forfeited share account. That entirely because the shares have been reissued would be credited to forfeited share account. Now in respect of Hari, the problem is 600 shares were forfeited but only 300 reissued. So now here we have to find out the proportionate amount which we have to transfer. So for that we'll use the formula total amount which is there in the share forfeited account, forfeiture account, divided by the total number of shares forfeited multiplied by the shares which have been reissued. Now, to calculate the total amount which has been transferred. Now, here, first we know that 300 shares has been reissued and total forfeited is 600. Now, we'll have to calculate the amount which is credited. For Hari, if you see, he failed to pay at the allotment stage. So, what he has paid is the application money. So, application money he has paid is 6 rupees on his 600 shares. So, what has been received from him, which is credited, is 600 into 6, that is 3,600. So, we take it here, that is the amount which is credited. So, find the proportionate amount, it comes to 1,800. So, in respect of this 300 shares, we have 1,800. We'll total these two together, it comes to 7,200. But however, remember, the shares were reissued at discount because it was issued as fully paid up but on receipt of 9 rupees, which means 1 rupee discount. So on 1,200 shares, 1 rupee discount comes to discount would be 1,200 shares into rupee 1, 1,200. Therefore, the balance of 6,000 is the amount which is transferred to capital reserve. This is the calculation. Therefore, from this option when you see, therefore the option B, 300 shares related to Hari were included 1,200 and the amount that is transferred to capital reserve was calculated in this manner. For Mohan, the entire amount because entire shares were reissued. For Hari, proportionate amount we calculated to find out this total amount of 7,200. But don't forget to remove this discount on reissue. Discount on reissue has to be subtracted and the balance amount only would be transferred to capital reserve. So this is related to the case-based question. Now moving on, we go to the next last category of assertion and reasoning here. So here we have to know that option A is for both assertion and reason are true and the reason is a correct explanation of the assertion. For B, it is assertion and reason are true, but reason is not the correct explanation. So individually they are correct. Assertion A is true, but reason is false. Or D, assertion is false, reason is true. Now looking at the first question we have, assertions preferred shareholders are given a fixed rate of dividend even if the company earns no profit. Now here, yes, they are given a fixed rate of dividend, but the part where it says that even if the company has no profit is not right. If the company does not earn profit, the preferred shareholders are not given any dividend. So here the assertion is false. So second reason, the preferred shareholders have preferential right of dividend to be paid at fixed amount or an amount calculated fixed rate, which may either be free or subject to income tax. This is true. Therefore, if you see, the option D would be the right answer because the assertion is false. But the reason they have given is true. Yes, preference shares means they have preferential right to dividend and we know that fixed amount or the fixed rate amount would be calculated and that would be paid, which can be either free or subject to income tax. So this is true, but the assertion is false. So the right answer for this is option D. Moving on to the next question. Assertion is ABC Limited gave shares worth 2 lakh rupees to the vendor from whom they bought a machinery. Yes, this is a case of issue of shares for consideration other than cash. Means shares have been issued not to raise cash but to settle some other transaction. So that is true, it is possible. Now reason, the company can issue shares as against payment to vendor. Correct, that is true. As a payment to the vendor, instead of paying them 2 lakh rupees in cash and reducing liquidity, they went ahead and issued the shares of the company to, and therefore both reason and assertion are true, and reason is a correct explanation, and therefore the right answer here would be option A. Moving on to the next one, assertion. Gamma Limited invited applications for issuing 10 lakh equity shares per 10 each. The public applied for 8 lakh shares. The company cannot proceed for allotment of shares. Yes, that is true. Why? Because there is minimum subscription clause specified by the SEBI, Securities Exchange Board of India, that company can only proceed with allotment on receipt of 90% of the issued shares. So here that is not fulfilled. So they are right. So assertion is true. The company cannot proceed. Reason, the applications can be processed if the company receives minimum 80%. No, it is false. It is 90%. And therefore, here the assertion is true. But the reason given is false. It should have been 90%. And therefore, the right answer here would be option C, where the assertion is true but the reason is false. So friends, this was a quick revision for you all on this topic of accounting for share capital. Hope this was helpful to you. If you found this video helpful, please do like, share and comment on this. I will be back with the fourth session next week on financial statements and accounting ratios. So for those who have not subscribed, please do subscribe to my channel and don't forget to click on the bell icon to get notifications of my upcoming videos. So see you all soon. Thank you.